Hey guys, Taylor with GammaEdge here, coming at you with a post-market recap for April 29, 2025. Fairly choppy day, but after the gap down, the bulls held strong. SPX structure and our sentiment gauges continue to remain constructive. So with that, let's get into the pre-market prep and our intraday price action analysis. So here, starting out with our market trend model. If you're unfamiliar with that, it's built off the tick index, which we create a time series out of. Reason we do that is so not only understand the intraday buying and selling taking place in the market under the hood, but also multi-day to multi-week trends as well. Coming into the session today, we can see, it has been constructive, really going back since last week when we kind of saw the improvement in price action itself. That has so far been met with buying under the hood as well. Predominantly looking at the filter tick, we've had filter tick buying days, which is just another measure of significant buying pressure. So Monday yesterday was a strong day. Friday last week was a strong day. Thursday last week was a strong day. So on kind of a short-term to intermediate term, the market has been improving. So from a swing trading point of view, the market is much more constructive today and has been improving than it was, this time, beginning of the month. From there, we then do our analysis on the SPX options market. Reason for that is the options market is forward-looking. Therefore, we can inherently understand and see what the forward positioning of the market is. And we do this specifically in SPX because of the size. It is the most liquid, deep options market. And by understanding the SPX, we can get a broad understanding of kind of the market expectations overall. What we do here, starting with SPXA, remember this is the cruise ship. There's two components of the SPX, SPXA, SPXP. SPXA is your longer-term, slower-moving capital where institutions like to place their positioning. And so what we can see here is that this structure has been improving day over day. Below spot price, we are call dominated. Below spot price, that is above spot price, we are mixed between call and put dominated strikes. We want to see these strikes continue to turn green, which they have been, which again suggests and signals that call speculation is coming into the complex. So just recapping, market trend model has been improving. SPXA has been improving. Both of those are a step in the right direction. Then from SPXA, we then move to SPXP. SPXP is your daily, your weekly, your 0DT options, while SPXA is your monthly and your quarterly. So SPXP, this is where your short-term speculation is taking place. Here we can see above and below spot price, we are call dominated. That it's constructive to see. As all kind of markets that are appreciating, moving higher over a sustained period of time have a bullish foundation, which is underpinned by this call speculation above and below spot price. So from our market turning framework point of view, the market trend model is trending higher. SPXP, constructive, call dominated. SPXA is now making that turn to be more call dominated as well. So again, regardless of, tariffs or news events or whatever, under the hood, looking at the data as it stands right now, the market has been improving. Now, when the facts change and the data changes, we will change. But as of right now, the transition zone, 5,500, again, that's a key level in the complex. So long as we hold that, we remain call dominated. Market trend model is trending higher. All things are looking constructive. So with that out of the way, we then turn our attention to SPX 0DT trading. Everything we just reviewed was helpful for, kind of swing trading, understanding that environment. And, as we find, candidates that are call dominated, we would be interested in taking those. But then again, like I just said, shifting gears to SPX 0DTE and specifically trading that for our intraday traders watching this. So the top of transition, which is our DEX and GEX transition zones based off delta and gamma, that was at 5505. And then, we can just call that 5,500 as well, because that's a whole psychological level. And we know that on the SPXP full complex, that was the key transition zone. So again, above that level, and we are more constructive to the upside because we start to enter the call dominated part of the structure. The other elements that we have here is the pink box. This is the implied move from the options market. So that we're just taking the at the money straddle as an example is one way that you can derive that expected move. Then we also have something called our drunken sailor range, which is the orange box. Purpose of the drunken sailor range is, even though we break above the top of the transition zones, which again, 5505, and progress higher in a call dominated environment, there is still net little call influence here. So this is going to be much more driven by intraday volume activity and, the buying and selling taking place in the options market, as opposed to, kind of market maker dynamics and the moneyness of options changing So this is the reason that we watch that. We think of it kind of as an air pocket. So again, the thought process here is above 55.05, we are generally more bullish than bearish, but we want to see the market trend model on an intraday basis trend higher, our intraday volume analysis, which we haven't gotten to yet, but we'll get to that in a moment, that trend higher as well. And then 55.50 is kind of the first key upside level. So again, from 5,500 plane to 5,550, and then above 5,550, if we can make that move and sustain higher, then we would expect to see that move up to 5,570. Again, a little bit of an air pocket here, up to 5,570. And then above 5,570, we can make our way up to 5,580. So again, you kind of see how that works based off the structure. We have key levels, we have air pockets. So, we move through one key level, kind of a level system, right? Move through one level, a bit of an air pocket. Want to see that buying come in, move to the next level. And then right below 5,500, less optimistic on the market from an intraday basis, right? From a longer term time frame, we would need to see the options market start to deteriorate in terms of call speculation leaving, put speculation starting to come back in, and the market trend model rolling over. And so moving to price action itself here, I have 5,500 marked down here. I have 5,550 marked down here. And again, we gapped lower down towards 5,500. Bulls were able to maintain that level. We pushed higher, bumped our head most of the session on 5,550. And then right towards the back half of the day, we were able to finally break through 5,550, made that push up to 5,570. And then from there, we really just chopped around the rest of the session. And again, just going back here, 55.50 was this level, then moving up to 55.70. So it's pretty logical that move from 55.50, 55.70, and then why we stopped progressing once we got to 55.70. And that brings us to our intraday volume analysis. So the point of this is for SPX 0DT specifically, because remember, 50% or whatever of all volume in the SPX occurs in the 0DT complex. We look at the intraday call and put volume. What we do is on a 5-minute basis, we aggregate the call and put volume. We understand the distribution. We find the middle of that distribution, which is called a centroid, and we plot that for the call and the put side. So every 5 minutes, centroid, 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 trend, centroid, we connect those dots for you so you can visualize it, understand what the trend has been. And this forms the solid green and the solid red lines. And so the point of this is, from the open to any time throughout the day, remember we produce these on 5 minutes to say noon, we can understand what the behavior of the call centroid in this example has been. So it's been fairly flat. So what does that mean? All things equal, we would expect for the same behavior to progress through the end of the session. And that is what we call our lines of best fit, which are these dashed lines. Keep in mind, every 5 minutes, those dashed lines will change. The rate of change will change. The slope will change depending on what the centroid does. So again, you can understand why this is useful because again, say we're at noon, we can understand this. So we can understand A, the character of price action based off of the centroids because price follows centroids. And B, we can understand what the projected path of those centroids are through the end of the session, assuming all things equal. Remember, price follows the centroids, so that is helpful for whatever strategy. If you're bullish, if you're bearish, if you're options, credit seller, futures, whatever. Here we can understand, we're not seeing any call speculation higher. The put speculation was trending higher, based off of noon. So again, that kind of tells us, puts a little bit of a cap on the upside, but it kind of tells us, okay, there's not a ton of downside risk because there's no material speculation lower. And then, this also brings us to the market trend model. This is a kind of a great 1-2 punch because intraday we could see that buying was occurring in the market. A linear update here, we are seeing significant buying from our filter tick as well. So again, pairing kind of what actual speculators are doing with what we're seeing under the hood, very compelling case of, at least not wanting to get short the market today. So showing you how to make this tool actionable and useful, right? This is what it looked like at roughly 12:30. We could see the call centroid was fairly flat to lower on the day. So all things equal, we're assuming this. And then looking at the put centroid, again, this was trending, pretty steady higher on the session as well. So this is kind of a classic choppy price action. Again, we would expect not a ton of upside from here, but also not really a ton of downside. So, all things equal, price is going to follow this. Now, keep in mind the centroids don't actually cross. We've never seen that. That is just based off of what the data is showing us. But as we progress throughout this session, those rates of change will change and update. So as an example right here is an hour later at 1:30. Again, much the same. That call centroid has not changed. Put centroid has not changed. Again, pricey action, choppy price action is expected. So, the way this is useful is if you're a credit options credit spread trader, again, selling above or below the centroids, just kind of understanding that the market is likely range bound, or, if you're an intraday scalper, whether, you're wanting to get long on higher lows, or you're a counter trend trader, kind of understanding when we're trading around 55.50 or trading up, the line of best fit or the centroids. That is the way that you go about using these tools. And then, right, another useful thing is with each of those 5-minute slices, we create a GIF at the end of the day, just so we can understand kind of what price action is doing. Key things to notice here is 55.50, never really able to break above that. Call centroid flat to lower on the session. Put centroid trending higher as well. And so again, that kind of caps any downside move. Last thing that I did want to note that we were making reference of, that's an important concept, is once we got that move through 55.50 up to 55.70, we call this the 50 delta line. The reason for that is we can see here all of this call centroid activity. So if the presumption that a lot of this was opened out of the money when price was down here, now price is theoretically at the money of all those contracts that were placed. And so those contracts, right, have gone from out of the money to at the money, significant rise in the price of that option. And so this is a natural spot to monetize our position. So, yeah, that kind of makes a lot of sense of why we did not see further progression higher. A, we did not see a material continuation of the speculation we saw here as price moved higher that really capped out. And then B, kind of fighting the force of those at the money contracts that could have been monetized at this level. So that's just kind of a nuance of using this chart of when we have a flat centroid, not a trending centroid. And when then we get into that level, the 50 delta level, kind of that monetization choppiness is a signature of that. So with that, all I got for you guys tonight. Hopefully you kind of understand our pre-market prep, our framework for understanding kind of the market health from a swing trading point of view, and then understanding how to apply these tools on an intraday trading basis. So with that, you guys have a good night. We'll talk to you tomorrow. Thanks. Bye.